What's up, you guys? When an impactful macroeconomic event like what we're in the middle of is occurring, it's important to take a step back and try to get a holistic view of what's going on in the markets and see if we can find an investment that fits our criteria. One way that people are looking for investing opportunities during this time is to try to find companies with a competitive advantage and a good balance sheet whose stock price is depressed, providing good entry points as you build your position with the confidence that they will get right back to where they were as soon as things get back to normal. I think this is a great strategy, but personally, I'm hesitant with most companies as there are way too many uncertainties in the macro at this time. We still can't see the light at the end of the tunnel, and no one is really sure how long this is going to last. In my opinion, I think there will be another crash or dip in the market. I talked about this in my last video if you're interested. So because of all of this, an important question to ask is, what companies are not being affected at all during this economic downturn and have a huge opportunity moving forward, recession or not? People are spending a lot of time at home. Their routines and habits are slowly getting affected. I think a good way to think about investing during these times, and one place to look for opportunity in the market, is to look at what habits are being formed by the masses and what companies are benefiting from the current circumstances of everyone being stuck at home, as well as most businesses being shut down. When thinking about it this way, one company that has shown immunity during these tough times is Chewy, who has a great business model with a laser-focused commitment to customer service at a level that competes with the likes of Amazon. I'm an investor in this company since last fall, before this craziness even started, and I think the unfortunate circumstances in our country that are affecting the rest of the economy are actually benefiting Chewy in many ways. We will talk about Chewy's business and what it actually does. We will talk about their obsession with customer service. We will look at the direction of the pet industry, as well as the secular tailwinds that the company has going for them, and also discuss how millennials, as well as the humanization of pets trend, is helping the pet industry progress. We will see how the company has performed as of late and through the last few years. Lastly, we will look at the main competition and hear my final thoughts on what I think about the business. Just a quick disclaimer before we continue. Don't take this as financial advice, as I'm not a financial advisor. This video strictly reflects my own views and opinions, so please do your own due diligence before you invest. Chewy is the largest pure play online retailer of pet food and pet supplies in the US and sees its singular focus on pet products as an advantage over broad market retailers like Amazon and Walmart. Chewy's strategy has been to focus solely on one category, pets, and do this better than anyone else. When it comes to pet supply prices, wide range of selection, and customer service, nobody in the industry is doing it better right now. Consumers love their pets and are willing to spend as much as it takes on. Chewy has done a great job of satisfying demand with premium products that resonate well with pet lovers. The pet industry has little seasonality, making it easy to plan for and allocate resources, allowing companies like Chewy to maximize their efficiencies. It has capitalized on this with its subscription plan, as 2/3 of its sales now come from its autoship customers, who make up a substantial portion of its base of more than 14 million customers. Autoship is exactly what it sounds. It's Chewy's version of a subscription model, and it is a strong metric for a business to have because it shows recurring revenue, and this gives investors more confidence as it can be used to estimate future revenue with much better accuracy. Chewy's Autoship program allows their customers to select any product they choose and have it delivered to them automatically at different time intervals, depending on how often you want it. You can obviously change the schedule at any time, but the point of this is that it makes life a lot easier on their customers. You don't have to worry about remembering to buy your pet food or their medicine or supplements. It just automatically arrives at your door. Through surfing their site, Chewy promotes certain brands more and more and entices people to add certain products to their autoship for an extra 5 to 10% off. Their algorithm obviously targets customers based on their needs, so you'll get product recommendations that relate to you. Chewy has taken their customer service to another level, which in my opinion, it's a huge competitive advantage. It's a big reason why it's become the online market share leader in the US in the pet category. Considering Amazon's ambitions to compete in almost any market, and with any business that stands in its path, how did this happen? Well, if we're going to be honest, it's because Chewy took a page out of Amazon's playbook. They learned from Amazon how an obsession with customer service drives customer loyalty as well as new customer growth, because your existing customers end up promoting your brand at no cost. Chewy has applied this approach very narrowly to the pet category, and as a result has taken customer obsession to another level. The company sees excellent customer service as a core competency and the necessary way to differentiate itself from competitors, both online and offline. Chewy prides itself on its high-touch customer service, offering personalized touches like handwritten holiday notes and welcome cards, original pet portraits, and even flowers to the family of a recently deceased pet. The company calls this the wow experience, and it's a key reason why it has a Net Promoter Score of 86. The Net Promoter Score is just the percentage of its customers that are willing to recommend the brand to a friend. To help drive home this unique customer experience, Chewy has very fast delivery times, and it also allows their customers to return anything, no questions asked. Chewy benefits from a whole lot of secular tailwinds in the pet industry. Before we touch on those tailwinds, let's focus on the pet industry's toughness for a second. This is an industry that has proven to be one of the most resilient during an economic downturn. Some would call it a recession-proof industry. During the financial crisis in 08-09, pet food and accessories were one of the few categories to see sales increase, as Americans have historically shown their willingness to spend on their pets even during tough times. Let's not forget, pet food is not a discretionary item. Pet owners will continue to buy pet food through thick and thin and would cut back on almost everything else before letting their pets go hungry. Now back to those secular tailwinds. It was last reported that 85 million US households have a pet, and over the last 30 years, pet ownership has gone up from 56% to 68%, and this is continuing to rise. The pet industry reached $74 billion in 2018, and then jumped all the way up to $95 billion in 2019. That is a 28% increase. I mean, that's staggering. It doesn't even make sense, to be honest. Regardless, Chewy is capturing a big part of this growth because of the way their business model is set up. People just feel enticed to keep spending, as we will see in a bit. One big trend that Chewy benefits from is the humanization of pets trend, where people are increasingly treating their pets like members of the family. You can see this in the fact that Americans spend $490 million in pet costumes during last Halloween. The pet industry has also experienced increased services, meaning there is more attention being paid to pet grooming, pet care, pet transportation, pet hotels, and many others. I mean, my cousin has more than a few outfits and accessories for her dog. The largest demographic of pet owners are millennials. Millennials have grown up with and are essentially trained to buy things online. They also love accessorizing things they own, which is a big reason why the pet industry has seen significant growth in luxury pet services. Food for pets has also changed. Consumers do not want traditional food options for their pets anymore. They want healthy ingredients, and they want to understand the ingredient list. They are opting for more fresh, frozen, and made-to-order diets for their pets. Now, these products usually cost more, but consumers are actually trading up and actually spending on these. Chewy stands to ride this trend for the long term. Although in the short term, we will see how this plays out due to the current economic downturn and the fact that the unemployment rate is so high. Going back to the beginning of the video, it seems that Chewy is greatly benefiting from the new habits that people are forming due to most businesses being closed and everyone being asked to stay home. What I mean by this is that social distancing is programming and training more and more people to buy their pet essentials online. There's plenty of pet owners who have traditionally got in their car and drove to brick and mortar stores, but now that those stores are closed, more and more people are being forced to buy their pet products online. I am wondering, how long before Actually, let me rephrase that. How many consecutive online orders will it take for an owner who didn't buy their pet products online before to realize that it is much easier and more time efficient to get them over the internet from a platform like Chewy, who make it so easy with their customer-friendly platform and the auto ship program. On top of that, they're as cheap as anywhere else you can get your pet products. Now let's talk about how the company has been performing. Earlier this April, Chewy announced their Q4 as well as their full year 2019 financials. It was another stellar quarter and full year from Chewy as the company grew on all their main important metrics. Some of these important metrics include net revenue, active customers, revenue per active customer, and auto ship customer revenue. As we can see in this screenshot from their full year 10K report, which I have included a link for in the description, look at the revenue growth from the last few years. That is really impressive. Now some people might say, hold on a minute, is revenue growth slowing down? Well, from 2017 to 2018, revenue grew a staggering 68%, and from 2018 to 2019, it only grew 37.2%. Now, that's not the trend we want to see, but I mean, all I can say is 2020, baby. What do you think is happening to revenue in 2020? Now let's move over to active customers. Chewy defines active customers as the total number of individual customers who have ordered from them at least once in the past year. Now you might say, that's it? They just have to order once and they're an active customer? Well, remember, and this is the great thing about Chewy, their business is very sticky.
When a customer tries them out once, there's a good chance that they will buy from them again. The more they buy, the more it makes sense to enter the auto-ship program. So it's really nice to see the customer numbers at 14 million because it's basically double what they were doing 2 years ago. Also, look at the net sales per active customer. Their customers spent $310 in 2017, but as of 2019, not only do they have more customers, but each customer is now spending $360. So it makes me confident as an investor to see Chewy's customers spending more and more, as this figure has been increasing by a solid 8% per year over the last few years. The last thing we will touch on is how much money Chewy is bringing in from their auto-ship program. This is once again one of the most important metrics, and just like all the other metrics, they've hit this one out of the park too. Auto-ship sales came in this year at $3.36 billion on revenues of $4.85 billion. This means that 69% of their revenue is coming from customers that are enrolled in the auto-ship program. Another big positive is that auto-ship customer sales as a percentage of total revenue has been going up.
The auto-ship business acts as its own competitive advantage, creating a barrier to entry for other companies, and a sustainable, easily predictable revenue for Chewy. It creates a high margin business because Chewy can much more easily prepare for those orders. Autoship has proven to be a hit with pet lovers, driving reoccurring sales from 115 million in 2014 to 2.3 billion in 2018. And as we saw in the chart, 3.4 billion in 2019. Chewy is also seeing a boost from its rapidly growing private brands. Management has been working to expand its assortment of private label products. Exiting last year, private brands accounted for only 5% of the company's total sales, but CEO Sumit Singh believes it can reach 15 to 30% over time. To get there, Chewy has expanded their private label assortments by more than 80% in the last year, and sales from this category were up 60% year over year in the last quarter. Chewy's private label products now have a double-digit market share in certain categories like frozen foods, jerky treats, and natural bones and chews. Best of all, private label products generate higher margins from Chewy than sales of third-party products. Another huge catalyst to Chewy's business that can become huge is their pharmacy business. During their recent earnings call, the CEO mentioned that the pharmacy business is Chewy's fastest growing segment. That suggests that it even outpaced the 60% growth that the private label business enjoyed. The big opportunity that Chewy has is to encourage its 13 million active customers to spend more with the company, including private label products and the pharmacy business, both of which come with higher margins than the core business. Chewy is not yet profitable as it spends a lot on marketing, but both of these high growth segments like the pharmacy business and private label are slowly pushing the company towards profitability. Chewy's greatest competitor is Amazon, but unlike most businesses that compete with Amazon and fail, Chewy is doing just fine. Chewy is in a really good position. This is because their main goal has been intently to focus on one category, pets, and do it better than anyone else. Despite Amazon's excellent customer service, Chewy is winning over more and more pet owners by making the relationship more emotional and less transactional. They are tugging on customer heartstrings with their handwritten cards, paintings, and sympathy flowers. And they're almost establishing a personal relationship with the customer that Amazon hasn't attempted because they're too big to pay attention to such a small segment of their business like pets. After all, Amazon was founded as an online bookseller, branched out into CDs and DVDs, and gradually expanded into general merchandise. None of those categories offer Amazon an opportunity to win over customers based on an emotional attachment to the product, like a toaster. You can't possibly have an emotional attachment to a toaster, can you? I don't know. I feel like if we asked Graham Stephan, he would go to war for his avocado toast. But in all seriousness, the pet category is one where customers have an emotional attachment to their pets, which can lead to an emotional attachment to certain products that their pets enjoy or that they are in dire need of. Having been founded solely as an online pet retailer, Chewy established that personalized emotional connection from day one. While Amazon represents a competitive challenge to Chewy for other reasons, it would be hard for it to beat Chewy on connecting with customers in the pet category. When it comes to pet supply prices, a wide range of selection, great customer service, no one, not even Amazon, is doing it better right now. As for my final thoughts, you probably guessed it by now, but I'm very bullish on Chewy. And given the high growth trajectory of the pet industry, combined with Chewy's stickiness and ability to win customers over and grab market share, I definitely think this stock can increase 5x in value over the next 5 to 7 years, and it can possibly even increase tenfold over the course of the next 15 years. I do not think it's far-fetched to look out in the near future and see a pet industry that's $150 billion to $200 billion in revenue per year. And Chewy having at least 20 to 30% of that market share, which means they'll be pulling pulling in revenues of anywhere from 30 billion to 60 billion. Now I know that's a wide range, but there's no way to know. And if Chewy is getting revenue of 30 to 60 billion, it wouldn't be far-fetched if Chewy was an 80 to 100 billion dollar company. Again, I'm not a financial advisor, so don't take this as financial advice. This video only reflects my own views and opinions, so please do your homework, do your own due diligence before investing. Thank you so much for watching this video, and don't forget to subscribe and hit the like button. Also, let me know what you think about Chewy. Is it a good investment? Will you be looking into it a little more? Till next time.